Hello, I'm Rhonda Porter, mortgage advisor from Seattle, and I'm here with your weekly mortgage market update for the week of December 23rd, 2024. Last Wednesday, we had the results of the Fed meeting. As expected, the Fed members voted to cut rates by 25 basis points, and yet they toned down their forecast for future rate cuts due to inflation trends. This part was not expected as much. Now, when the Fed cuts rates, they are reducing the Fed funds rate, which is not to be confused with mortgage rates. The Fed funds rate is a short-term overnight rate that banks use to lend money to one another. It is an important rate as the prime rate follows the Fed funds rate, which HELOCs are attached to, and other debts use this base for interest rates. Optimal Blue reports the 30-year fixed average 6.8% as of last Friday. This is slightly higher from my last weekly update. So, and you can see on this chart on the dark blue line where rates have been trending slightly higher leading up to when the Fed cut rates. And please remember, though, that Optimal Blue is an index of an average of about 35% of the mortgage transactions or lenders who use Optimal Blue for locking in interest rates. And this is as of last Friday, December 20th. So these rates are expired. You cannot lock in rates from last Friday. And we also don't know with these rates how many points were used to price them, what the loan to value was, or what the person's credit scores are. So this is just an average to give you an idea of the trend that we've been seeing with mortgage interest rates. We have a short week with the holidays. The bond market's closing early on Tuesday and will be closed all day Wednesday in observance of Christmas and Hanukkah holidays. And markets can be more volatile during the holidays as there are likely to be fewer traders. It's around 11:45 Seattle time as I write this post. Mortgage-backed securities are down around 24 basis points. The big red candlestick that you see here on this chart is from last Wednesday when the Fed dropped the funds rate by 25 basis points. So mortgage-backed securities actually wound up that day deteriorating by 47 basis points. So it wasn't a great day for mortgage rates. And you can see that how rates actually moved in the opposite direction of the Fed on that day. So and what their actions were. So it's really important to work with a mortgage professional who invest in tools like Mortgage or MBS Highway, who follow the bond market so they know what economic indicators or events may be impacting mortgage rates. So you can make an informed decision on when you might want to lock in your interest rate. If you're thinking about buying, selling, refinancing, remodeling, or restructuring your debt, I'm happy to help you create a game plan, even if it's not for several months. So I hope you have a wonderful week and a fantastic holiday with those you care about most. Take care, and I hope to talk with you soon. Bye-bye.